How's it going, guys? This is Forensic Forex with Deontay, and I'm back with another video. So today was NFP, non-farm payroll, and we have a lot of volume injected into the market at 8:30. Now, before 8:30, the previous kill zones outside of New York session were already trending, right? The markets were up very high on the daily candle or down very low for the daily candle, depending on the period you're looking at. So if you were looking at the majors like NU, EU, AU, and GU, most of them were up already before 8:30 and greatly too. And vice versa. You saw UJ, UCAD, USWISSy, Dollar, they were down greatly before non-farm payroll. So I suggested to the chat or the Telegram channel that odds are non-farm payroll is going to continue to push price in that direction, not giving us a reversal for non-farm payroll. You know, price is already up and then non-farm payroll drops and we see fast decline in price action. We didn't get that actually. Now, with the daily bias and what we're showing here right now, we saw that we had a run on sell-side liquidity pool, and it's either two things that we always mention. It's either going to be a false break or it's going to be bearish momentum. This case and stance, the way it played out in the sequence, I'm going to say it's a false break. Why? Because why reprice price down here and then bring it back up here to take out a swing high? So you clearly wanted to get traders on the wrong side again. So again, we printed another swing low. So this was one swing low. We can take off the caution sign now. That was one swing low printed below the open. And now this is a second swing low printed below the open. Again, if it's a bullish month, you're going to see swing lows form below or around September's opening price or the monthly opening price. Doesn't matter the month. It's just the characteristic or the speculation. If we're going to have higher price action for the rest of the month, there will be some type of bottom or multiple bottoms form below the open or near the open. So already we got two swing lows. These could be the low. This could be the low of the month so far. So September the 4th, 2025, Thursday, this could be the low of the month. Now, I'm not saying that this is out of question that price can't turn around, because we know how fiat currencies trade, especially with what's going on in the world. Things can get ugly and things can fundamentally not be sound. We've seen that many times throughout the year where fundamentals were totally disrespected and a lot more was going on. Right now, if price is breaking this swing high now, we would look to this and tell ourselves, okay, then these lows will more than likely want to be protected. They don't want to run these lows. We did have a sell side raid. We'll put an X there, a sell side raid, and then a quick repricing back up to buy side liquidity pool. Bang, right up here. Now, moving forward, I feel like my sentiment will lean more towards that bullish seasonal tendency for New Zealand dollar. If you look on the flip side, let's take a look at the DXY. Dollar dropped quickly. So we did create that swing high formation that we were talking about. It failed to make a higher swing low. It failed to make a higher swing high. And it failed to break that high there. And it turned around quickly. You also can see that CRT theory, right? Price breaks this high, this range high, and then returns back inside the range and takes out that range that price action is trading in and takes out that low. More specifically, it takes out what? That 20-day IPTA low. So we could see if price action is going to continue to fall lower. Now that we broke a swing low, what does that mean? Bearish momentum. Or, again, there's always that or. There's always two sides to the coin. Or is this a false break? We get dollar to go back up. If not, if dollar's not going to go back up, we should expect lower swing highs, lower swing lows to print. So already we printed a swing high that forms above the open. If this month is going to be truly bearish, think about the framework and the actual ideas that I'm trying to tell you, right? The concepts that I'm trying to tell you. It's very organic. If it's going to be a bearish month, think critically about this. It's not a lot to understand. If it's going to be a bearish month, we have to have a top. And so far we got one. And if you're going to get a lower swing high, that would be perfect after breaking a swing low. Let's take a look at the other pairs. Oil's dropping, which is nice. You want to see oil and dollar drop together, right? Positive correlation. It's awesome. Oil is dropping out of sky. That's a smash candle idea. Up close, traders think a breakout. Instead, it fades, engulfs, takes out that low. Larry Williams would have told you go short here as a signal. Let's move on to the next pair. USWISSy, look at that. Look at that. Right, we raid this side, right? CRT theory again. We raid this candle's range, come back in, close inside this range, and then we take out that previous candle's low or that range that we're working in. Awesome. And we even take out this one too. It even kind of has a remix here. CRT takes out this high, price closes in here, it goes outside the range again, takes out that candle's low. But major sell-off today from USWISSy. Now this is giving me a lot more confidence that the dollar pairs will go lower. So UJ, Likely is going to go lower too. UCAD as well. UCAD failed to take out the previous daily high. We took out the previous daily low. We gave back a lot of the gains to close back up green, but we could see probably in the near future we will try to recover this. That's my speculation based on what we see from the other pairs. EU shooting up. Now we're finally breaking away from that inefficiency. That large SIBI we had, that sell side imbalance, buy side inefficiency. We've been trading in it for a long time. Looks just like USD and dollar, right? But vice versa. Trading inside of it, going to the premium side, going to the discount side, going to the premium side, going to the discount side. Finally, looks like we're making headwind. We're trying to get up here. Odds are we're trying to get right there. And then even then some. All right? So we're probably going to continue to make the high of the year. It's still not in play. Right? So far, the high of the year for EU is July 1st. I think we're still going to have a lot more headwind for that. And we see gold. Think about gold, too. Gold is taking off. Look at AU. If it's going to be a bearish month, it's going to create a bottom. Look, there's a bottom already. And they're going to do it quick. Within the first 2 weeks, they're going to get it quick. Get traders on the wrong side. So it looks like now we're breaking what? A swing high. Think about what we're doing. We're breaking a swing high. What do we need now? A higher swing low to continue this bullish trend. It may not happen as immediate as you want it to happen, but you got to be patient. There are other ways to get into the trend. Maybe wait for a down day. Wait for a down day and buy after. That could be a crucial point. Or at this point, you could be very aggressive that it broke this. You're looking at this as bullish momentum. Go in every day buying in discount environments. Buy below midnight. Buy below 2 a.m. Buy below 7 a.m. Buy below 8 p.m. And just keep doing that until you get in sync with the market. Obviously, you risk properly. Just trying to give you some broad framework here. GU, same thing. Instead of giving us that lower swing high, what happens? It resets the whole thing. Resets the whole thing. Instead of us getting that lower swing high that we anticipated, here runs up and gives us the lower swing high, it takes out a swing high instead. So it changes the stance and the narrative. This is bullish momentum again. This is bullish momentum. And you can see there's a large, I'll clear this off for you guys so you can see it. This is a large CRT theory. Price raises candles low, closes back inside. Let's bring it back. Here we go. Price does what? Raise this low. What range could we be aiming for? Maybe this high. So we're going to try and take a trade based on that, trying to get to that high. And that's what we got. We had a small, look at a small range. Again, small range. This gets everybody excited. Everyone starts to chase. Then the market gets quiet again. Then it goes large. This is picture perfect what small versus large range is. This is what Larry Williams was talking about in his book, Long-Term Secrets of Short-Term Trading. They will rock you to sleep like a baby with these small candles. They'll rock you to sleep. It looks boring. It's not enticing, right? There's no incentive to want to trade this probably tomorrow. But we know, since we're in this channel, we're informed. We read the book. We know the chapter. Natural cycle to the market. Range change. Large cycle is going to kick up. It was expected, especially after a large candle like this. All you need to wait is for small days. Whether you're getting it right to the upside or the downside, just understand there is a natural cycle to the market, okay? Let's move on. UJ, large move down. Look at that. Time to take out what? Swing lows, probably aiming for this, aiming for this, aiming for this. We're going to get there. That means yen is probably more than likely gaining value. AJ, NJ, just skim through these real quick. I just want to get down to the futures. Look at that. The bond yields are sinking. Sinking, guys. Sinking. And when you see these sink, you should see dollar do the same thing. Especially the 2-year. Since the short-term bond, 2-year is showing you exactly what the Feds are probably likely going to do. They're going to cut rates. Coming soon. 10-year down. 30-year down. Look at dollar doing the same thing. And Japanese yen looking to hold strong. Looking for a breakout. I love this. Right? Order block theory maybe here. Imbalance. Right? Fair value gap. We're trying to go up. We rate sell side. And I'm sorry to tell you guys, but in trading Forex or trading any currency or trading any asset pair, there's going to be fake outs. That's what you sign up to live for, to trade. New Zealand dollar. Look at the futures is coming back. I like the futures. We're getting higher swing lows on the futures. We did have a short-term raid here. You see that? Raid. And then we come back quickly to a swing high. Why take out a swing low and quickly reprice to a swing high if you're not going to go long? Think about that. Why take out this swing low and run back to a swing high if you're not going to continue going low? Unless it's a double fake out. Unless it's ram, and then go short. But my thinking is, if you're going to take out this, you're going to want to probably continue going lower. But if you're going to take this out and then go back up here, then you're probably telling us that you're going to go long. Australian dollar making higher lows too, right? Higher swing lows, higher swing lows. Higher swing low. Inefficiency, right? Fair value gap there. Awesome things to see in the market. Let's take a look at gold. Recap before we end this video. Look at gold. Another down day, right? Down day. Clear this off the chart. Down day and quick repricing back up all-time highs again. Gold hit what? It's about to hit big figure number, 3,600. That's the next level is probably aiming for right now, and so on and so forth to the end of the year. We might get a retracement maybe October, possibly, maybe even December, maybe. But right now, gold is on a straightaway train, rocket ship to the moon right now. Let's bring it back to New Zealand dollar. Recap. Here. Now that we got here, I want to see maybe order block theory. Maybe next Monday, next Tuesday, we trade back down into this range a little bit. Maybe retest this fair value gap, and we trade higher. Any down days now moving forward, I would like to see if we can find buying. All right. Hopefully you found this insightful. Peace.